You did crazy, oh, you ain't on the payroll. Can't be hanging with the same bros. We don't even go to the same show. So please be quiet, I'm being polite. You did crazy, oh, you ain't on the payroll. Can't be hanging with the same bros. We don't even go to the same show. So please be quiet, I'm being polite.
Hey yo, T-Beats, you killed this one, no cap.
Ice cubes up in my cup. If it's spice, one pour it up. She's a bad influence and looking like one of us.
Hello guys and girls and welcome back. It's Big John here, the @'s at the bottom of the screen if you'd like to listen to my music, and so is all the relevant information I'll be speaking about in this video. And today what we're going to be doing is we're going to have an ultimate guide to understanding what double tops and double bottoms are. We're also going to be going over triple tops and triple bottoms and some ways that you could enter these trades with strategies as well. This really does help with market structure. I hope you're going to like this one, guys and girls. There's also going to be a competition where I'll be explaining the rules of how to enter the competition for free signals at the end of this video. So make sure you stay tuned all the way through and stick with me, because you know I'm always giving out the source, especially in the video. And free signals, boy, I know everybody loves that. Give me some free pips, man. Let's get straight into the video. Okay, so what we're going to do first is we're going to start with what the definition is with a double top and a double bottom. So this is from Wikipedia, as you can see. I'll just leave this here on the screen so you can just read through it. Of course, you can pause it and then you can take individual steps through it or notes, whichever way might work best for you. And then we're going to head over to the charts so I can show you how it actually looks on charts within the market. So now we're actually on the 1 minute chart here, and what I'm going to be doing is I'm going to be going over a few different time frames to show you that M's and W's, double tops, double bottoms, is what actually moves the chart on a day-to-day basis. It doesn't matter if you start from the 1 minute time frame and you're going all the way up to the daily time frame. This pattern is always being created, and it can definitely give you great entries in the market no matter what time frame you're actually trading. So this is why I'm starting from the 1 minute time frame. I'm going to do the 5 minute, 15, 30 minute, 1 hour, 4 hour and daily, just to show you how great opportunities are understanding what double tops and double bottoms are. So here again, I've got a brief understanding. So double tops and double bottoms, also referred to as M's and W's, this is how the chart moves up and down. Traders are taught that the second leg of an M or W is the trade we are looking for, as it will give you the most volatility in the market. So let's just move this out of the way. So like I said before, this is a 1 minute chart. I have got on Heikin-Ashi candles. It just makes it a little bit easier for you to see M's and W's forming as well. And you can see here was the first leg of the M. Then it came back down. This is the middle part of the M. And here is where you would want to be trading the second leg of the M. You see, M, second leg. So some people say, oh, I'm confused. I don't really know what I should be doing when it's trading M's and W's. How do you spot them? Well, this is what you need to do. Make sure you just find a long move that's been selling for a while or buying for a while. And what you want to look at is the M's and the W's, the second leg and the first leg of an M or a W will always be mixed together. So the second leg of an M will be the first leg of a W. You see right here? So this is the last leg of the M, and it's also the first leg of the W pattern being here. So make sure you don't get that confused when you're drawing them out. Now you might say to me, which one does come first? I can't tell you which one specifically came first. It's similar to the chicken and the egg scenario. But like I said, you just want to look for a big breakout move and then follow a lead from there, just as I'm doing here. So you can see this was the M pattern. And now I would have been looking for a W here on the 24th of May. And we can see here, the double bottom was created right here. So you can see there was a double bottom here. Price went up, price came back down again. And what did it do on the second leg of the W? If I was on the 1 minute chart now, I'd have been able to scalp this pair and take it straight all the way up here. Just like I showed in my last Heikin-Ashi video about the candles, this candle here closed with no wick at the bottom. So this is telling us that this could possibly buy. We could have entered here and you could have held this on the 1 minute time frame. Now, I'm not saying this is the only way to trade. You can use other confluences, but something as simple as this can work for you. So you can see that. And then what happened? The last leg of the W now became the first leg of the M. Can you see right here? And then what did we have? We had a double top right here. Yep. And then we had a sell on the second leg of the M going all the way down here. You see? So that was perfect for us in order for us to trade a 1 minute time frame. So you want to look out for this. This is a pattern that can help you. So for all my 1 minute traders, yeah, you want to look out for M's and W's, double tops and double bottoms. And that might help you in order to catch some type of trades on the 1 minute chart, you know? Quick scalps. This is like what? 40 pips this was 20 pips here. And this was 20 pips there. So this is it all in one trade there. You could have caught this. So now I've gone over to here just to show you once again Wikipedia that there is something else called a triple top and a triple bottom. So this is all going to help you with market structure and understanding the actual patterns that are happening within the market that help you to identify a good trade setup. So there's also triple tops and triple bottoms. I'll leave the video here for a little bit so you can read through it, take your notes as well, and then we'll go straight back into the charts. So now I'm on the 5-minute time frame, and like I've said to you before, all of these setups happen on every single time frame, whether it be a double top, double bottom, triple top, triple bottom, divergence, whichever way. It will happen on every single time frame this way. It's up to you to identify on whichever time frame you prefer to take trades on or gain entry. It's up to you to identify this pattern that's forming. You can see once again, price came up to the top once, so we had some type of indication of a rejection coming back down here. Then price touched here again. Usually we'd get in here if it was a double top, but it doesn't matter. You could have got in here, you would have had great entry. And then what happened? Price went down one more time and went to test this level another time. So when it went to go test this level another time, what did happen here? Price never broke this high before. And you can even see price was creating lower high here. So price and momentum was getting weaker and going towards the downside. And then we had an entry for a third leg of an M right here. We could have got in here and we could have took this trade all the way down here. So I'm going to read this out as well. Triple tops and bottoms are also patterns that can occur when price has not decided to make its final push to the up or downside. It is up to the trader to know how to leverage their account so that they can protect their investment. A triple top or triple bottom occurs before their intended trade. So the intended trade was a sell here, but you can see they used one last leg to try and push you out. So they did a third leg of an M sell. And then if we just move this out of the way, you can see the same thing occurred right here. So they went up, they came down. Usually we would enter here. You're still okay if you entered here, as you can see, but it went up one more time, came down one more time. So this is where it can confuse people. So people, remember, you're going to be seeing the chart like this. So you're going to think that price, oh no, price is going to break here and keep selling. But if your stop loss was just below here, somewhere around here, of course, that's your own risk management. I have a risk management video. It will be in the link below as well. So you can watch that and you can figure out risk management. But if your stop loss was around this region around here, just a bit lower around here, then price would have never ever broke this level, never touched your stop loss. And then finally they decided to push it up and you would have been able to take this trade all the way up to at least here. That was your third leg of your W, being able to take price all the way up to there. So now we're on the 15-minute time frame. I am using GBP ORD here on the 15-minute time frame now. I went from the 1 minute to the 5 minute. This is the 15. This happens on all trading instruments. It's not just GBP ORD. It's not just currency pairs. It pretty much happens on all instruments. You can go and back test it as well and see. I'm just trying to give you examples of how M's and W's are actually formed, because I have a lot of people asking me questions about this. How do I spot an M or W, or what is an M or W? Well, this is the video I'll be giving to everybody now. Divergence double tops and bottoms occur when there is a manipulation of price. Our oscillator indicators can pick this up and show us manipulation in price. The TDI is what I use, and you can clearly see the difference in price from the TDI. So I just double click here and I'll show you what I mean. So let's go over to the M first. So this is a bearish divergence double top M pattern. And here's where the TDI picked it up. So we had a touch here, but then you can see prices coming down. But what happened right here? So when we go to this level right here to here, and I'll just change this color so you can see it. There was a divergence. So look, this was going up, the TDI was pointing up, and price was pointing down. So this is showing you that there's an inconsistency between price and most likely manipulation. So what's happening now is bearish divergence on a 15-minute time frame. And our entry was where? Right here when the TDI crossed red, bearish. We even had a Heikin-Ashi candle here, close with no wick. So if anything, if you didn't get in straight here, you could have got in on this candle right here. So the 9 a.m. candle, just for the 9 a.m. London breakout. How ironic is that? As I always teach, the London breakout, very good strategy, and you would have been able to get in just there, and you would have traded this trade all the way down. Now, if we go over to the buy, we're going to look at it here. So remember what I said, the second leg of an M is always going to be the first leg of a W. So this whole section here was the first leg of the W forming. Then what happened here? The divergence started to form on the W. So we can see price is pushing down and stopped here. You can see it tried to break here, rejected, came back to around this level, broke this previous low for the divergence, stopped here, and then what did we have on the TDI? We had bullish divergence. So I'll work it out here. You see, you had like a double bottom TDI. So you had a double bottom TDI. Now we're learning about double tops and double bottoms. And our aim would have been to trade where? We want to trade the second leg. Here is the second leg of the divergence. And we would have got in there. You had entry right here when the TDI crossed bullish. They tried to fake you out a little bit more, but you're still good. TDI cross right here for entry. But once again, this is why I teach my strategy of waiting for the HK candles to close. If you wait for the Heikin-Ashi to close, you would not have got faked out in this little bit here. You would have entered just after this one on this candle here. Some people like to wait for 2 closures with no wicks on the top or the bottom. So if you did that, you would have got in around here basically, and therefore you had no drawdown at all. Stop loss would have been below the previous low, and you could have had like literally a about 23 25 pip stop loss. And this was a, how big was this trade? This was a 215 pip trade. It went even longer than that. This was a 400 pip trade just from that move alone. So you can see how fantastic these things can work even from a 15-minute time frame. In this 30-minute example, it shows another bearish divergence double top formation. This time we are using 2 oscillators to identify a possible entry. Why I say 2 oscillators here is this time I'm going to add a MACD. So this is just the standard MACD that you can get. You just literally type MACD in your indicators and it will pop up there. And you'll see right now what we're going to do. So here's where the bearish divergence formed. Let me just get my trend line. Started from about here, and then you can see what's happening. Price on the TDI is going down around here. Yep. Should change this red so we know it's bearish. And now when you look at what's happening here, the TDI is giving us multiple re-entries for a sell here from this bearish divergence, whereas the MACD is only giving us 1 crossover. So let me just move this up again. Both the TDI and the MACD are on default settings right now. I haven't done anything fancy with them. Default from straight from when you get from the indicators list straight on the chart. So you see you had 1 crossover here basically on the MACD, but then you had multiple crossovers here on the TDI. So you could have got an entry here on the TDI, like one here, or you could have got another entry on the TDI like here, or you could have got another entry on the TDI from here. You see? So the TDI gave you like 3 extra entries on top of this divergence to either add more positions, or if you wanted to, just wait for the next one and then got in there to see if you got a better position. Divergence is always funny. They shouldn't push it too far up or down, but they can push it to where they need to. Shouldn't be too much sometimes, but you just got to go with what happens. You can't win every trade. We got to understand that. So now we're on the 1 hour time frame, and you can do this on any time frame as well, but I'm just going through time frames, and to make the video have elements throughout the whole video, I'm showing different setups and different ways you can spot this type of setup, the double top, double bottom, or how you can gain entry into types of trades that might be from this setup. Break and retest double bottom or double top formation patterns are also a great way to capture swing trade opportunities in the market. Now, what do I mean by this, you might be saying? Okay, so when we look at our chart here, what happened? We had our same typical setup now. Now you're probably getting bored and you're realizing, oh wow, John, I didn't know they do double tops, double bottoms all the time. If you're a very new trader, yep, well, here you go. You can see it went all the way down here for our second leg of our M, came back up, came down. So what is this? This is obviously our W pattern forming here. Now, what we would have been looking for here in this is we're looking for a break of the middle part. We can see here, we want a break right here of this level. Once this broke, it told us price has finally broke out of this whole segment here. See this whole segment. So let me just mark this out so you can see what I'm saying. Price has broke out of this area. Soon as price broke out of this area now, we had a break, we had a retest. Here's where we would have been looking to gain our entry here. So it's even funny because I'm sure if we, let's just get rid of the MACD from now. I'm sure if you had your TDI, yep, you did. So let's just bring the TDI down. TDI even gave you an entry right here. Not only that, you had a no wick Heikin-Ashi candle right there form. So you could have got in here. And your stop loss would have been where? Your stop loss would have been below the previous low. So not here, because this was like a little dip. You want to make it a bit further than that. So your stop loss would have been below here. And you would have been looking to get a target zone of a trade. You'd have been looking to get a target zone of here. And see, price came all the way up to this level here. Not quite to here, but target zone was here. Why was your target zone there as well? You may say, we're going to go over this in the bearish one as well. Your target zone was for the old highest high. So if price does swing trade and goes all the way to a direction, you want to see if it's going to swing trade to the previous highest high. And now we're going to look at the sell. So we can see here again, bearish, double top, most likely divergence. Yes, it was. On the TDI right here was divergence again. Even on the 1 hour chart, we're still getting divergence. So you can see there was divergence here. Price was coming down. TDI was forming a double top, even though this was forming a lower high double top, and we were looking for a break and a retest. So finally, look at this area here. It's not going to look the same every single time. We wanted price to break this area right here. This was our key area to break, because we can see price came down once, came back up again. When it came back up again, then we wanted to make sure that price was going to break this area right here. Finally, price broke this area. Then what are we looking for? We're looking for our retest. Our retest came here. Then we had a swing trade right from here. You see, no wick Kanashi candle. We would have entered on this one right here. The second one, where the TDI crossed, it was even in the overbought zone as well, which is perfect for us. We would have gained entry there. Our stop level was above the previous high or lower high, which was here. So we had entry here, remember? Here's where our entry was. Our stop loss was up here. And where was our target zone for this swing trade? Our target zone for this swing trade was here. Let me just mark this out again. Right here. This was our target zone. What happened? Look how price came exactly there. If you gained entry right here, you would have made a 700 pip trade. But bear in mind what I'm showing you here as well, because some people get impatient with this when they're very new to Forex and they don't understand the concept of what a swing trade is and scalping. What I was showing you on the 1 minute chart, 5 minute, 15 minute, a lot of those were scalping. 15 minute, you can get swing trades off of there, but most times people go for entry on a 15-minute chart, but they're looking at maybe a 4-hour, daily, even weekly sometimes. They might gain entry on a 15-minute chart in a day, but then they'll be trading the higher time frames if they want to do swing trades like that. But scalping is usually done on the lower time frames. When you come to a swing trade, now you can see you have to wait. This took 24 days to give you 700 pips. It was totally worth the wait. If you knew what you was doing. People with a lot of capital, that's what they do. They just put their money in, and you know, if you caught this on a 1.0 with 10,000 or 20,000 in your account, you would have made $7,500 from this trade in 24 days. You see, and this is what some people do instead of trying to make loads of scalps every day. And the reason I have this one here, you might be thinking it looks similar to the 5-minute one where I was showing you a triple top. Yes, it is. I'm showing you this because I'm trying to let you know, and you can establish that price pretty much always does the double tops and the double bottoms. It's how price will move. So I'm giving you a lot of source here. You need to rack up these views. You need to get these things going. Let's go, let's go, let's go. Because this is source what I'm giving you here. This is pretty much what people would give away in course material and stuff like that. And it's just the truth of it. This is market structure. It's always going to do M's and W's, triple tops, triple bottoms, double tops. It will do it. That's how the chart moves. It doesn't just move in one straight line, going up like this or going up like this or going down like this. No, it doesn't. Price will move in an M or a W, so it can move itself up. The only thing that's different is one part of the W will be lower than the other. The other part of the M might be lower than the other. So price can actually move like a staircase going up and down and move to new price levels. This is what it does. So again, a triple top here, you can see 4-hour time frame this time. It's just the same thing. It's literally like a swing trade, like the 1-hour one. We were just waiting to gain entry, and you would have seen that it touched it once. So you're not touching this trade yet. You don't care what this chart's doing. You want to see price go towards this level again. It perfectly did here. Then you could say, okay, I'm either going to gain an entry here, or if you see a discrepancy maybe on the TDI, which you can see prices forming what? Lower highs. From this last higher high, it was forming lower highs, but price went higher. So as soon as price went higher here, this was divergence. From here to here was divergence. This was telling you you could have got in here and held. And if you got in here and held, what happened? You would have put your stop loss once again above here. If price breaks here, you don't want nothing to do with this trade pretty much. So it might do a divergence into a next move going down, but You know, you can re-enter if you want to. It's completely up to you. You can't, once again, you can't win every trade. But you can see here, you would have been able to get in straight away there, and you would have been able to take this trade all the way down to this level. Where was your target zone? Your target zone in these swing trades is the last lowest low or the last highest high. Some people say previous, some people say last, whichever way you want to call it. That's what it would be. And then you would have been able to get in right here. You would have been able to take your trade to this level. If it's going to go there, it doesn't have to. News might mess it up, anything. If so, you know where your last TP level is, right there. And what happened? Price smashed this level with even more pips. And how long would you have been in this trade from? Let's say you got in here. This was another, this was 800 pips, but this was another 19-day trade. So you had to be in this trade for over 2 weeks, but you would have made 800 pips. You see where the benefit comes from this sometimes if you're just patient and you wait. This is like how I try and explain to people how you can trade gold. Instead of trying to find golds each individual move, I know it makes a lot of money in all the scalps, but if you just don't give yourself the stress and get faked out, just hold a trade and you'll catch these types of pips on gold and you'll make good money. Now, last but not least, because we still have some exciting news, stick around right to the end. Now, this is a double top bearish divergence on a daily chart. Just to show you, again, it's happening the same thing. Massive second leg of a W that went all the way up. You can see here we go. Here's your W going up here. And then we had a bearish divergence double top. We switched back on the TDI. We had divergence. Again, you see there was a peak here, but what happened? Lower highs, lower highs, lower highs. So this is what I was saying, which could confuse you. So if you tried to get in here, you would have got stopped out. Look how big that was to stop you out. If you tried to get in here, you would have got stopped out. Now, the biggest issue with this is you will get stopped out if you don't have a big enough stop loss in these trades. When you're day trading, your stop loss needs to be huge. It can't be 50 pips, 100 pips. Because one candle could be 150 pips if the ADR moves that much in a day, which is the average daily range of the pair. I would have said you would have had to have a huge stop loss, but let's see how far this did go anyway. Yeah, so this was insane. That like they specifically did this to get anybody out of the trade because they knew they were going to drop price 2,000 pips after. When you start seeing them doing erratic moves like this, yes, they want to hit targets before they drop, but realistically, they're just trying to get you out of the trade. They're just trying to get you out. Don't take offense to it. You just wait and you re-enter. So this is why you're good with your leverage. So if you saw they stopped you out here, you might have got stopped out twice, but that two you got stopped out for, as long as your risk to reward was correct, now you would have made all your money back in there straight away, and you would have made over 2,000. And where was your target zone in the daily swing trade? The previous low. What did price do? Price pretty much went right near the previous low, right here. You see? So in terms of the charts and the double tops and the double bottoms, that about wraps it up. So what I'm going to be doing now is one lucky subscriber that's on this YouTube channel is going to get the chance to have a month's worth of free signals. But what I need you to do is we got to spread this word, because I'm going to be doing some mad competitions out here. Comment something that you've taken away from this video, but make sure it starts with signals competition. Signals competition. That's what I need you to be able to type. So you type signal competition. Once a month, I'm going to be randomly selecting somebody and I'm going to pick them and they're going to have a month's worth of free signals. So if you want to get into that, spread the word, spread this link. Let's get into it because we be catching pips, man. I keep it 100. People can see in my Discord, I'm in there every single day trying to help people. If you want to get mentorship, just DM me. Most people that stay in the mentorship within the first 3 months, they manage to figure out some type of results and start to slowly become consistent. Or at least the best thing I do for them is they change the way they trade, their pattern, their emotions, their psychologies. Zoom calls as well. Make sure you subscribe. Let's get it. Let's get it. Competition, competition. Let's go. Let's go.